go. For some reason, my mic wasn't working on YouTube, but now it is. Still playing that down. And just roll the stops. You know, this is one of those things. I'm playing the too much, too fast move. I have no idea how far it's going to go. And I have to tip my hat to the fact that we could continue to blast higher with an OPEX trend day. So I'm playing the initial move, and all I'm going to do is roll the stops and let the stops do the heavy lifting here. That's it. He's angry. No, I'm good. Trust me, I like having fun, but this is shaking and baking. I'm sorting through GIFs. 550, still dropping. We're down 130 points from the open, which is great. That's still a phenomenal move already. And just roll the stops, baby. So far, see if they do drill it at least halfway. If they do come down a little bit, 480 will most likely be a bounce point. But again, I'm not really looking for a big downside move unless they do it. You know, if they do it, great. I'll just roll the stops and see how much we can eat. If not, I'm just looking for the initial too much, too fast move, and I have to see if they're going to attempt this higher liquidity. Right here. What's up, Nomad Trader? Deacon, Arctic Wolf, Beefton Beethoven. How you doing? Let's see what we can do. You've been canceled. How much put flow today? Come on, baby, load it. Out of the gate. Put buying, call buying, both of them together. And it logged me out again. Great. Bouncing back up green. We have news in 10 minutes, really? I'm not showing news. Let's see. Friday, January 17th. And I'm not showing any news today. Am I mistaken? No news. Another top wick right here. Keep an eye on tech. Apple once again getting smoked. Apple got smoked yesterday. Big time smoked. In fact, it was insane that we weren't down even further. But another top wick here, which we'll see if we can lead this down to the promised land of 480, 490. That would be a fantastic too much, too fast move if we can get it. Remember, this is a 3-day weekend. Monday, the market is closed Monday. A lot going on Monday. When we wake up Tuesday, the market may be shaking and baking. Nice top wick. Let's see if we can get 480. There we go. Beautiful. Beautiful. Joe Rogan says he doesn't like skinning bears because when you skin the bear, it looks like a human. Does that mean I look like a human when you skin me? Because we're going to roll this down to 480, baby. Overnight I was worried about, not today. I wasn't even bothering having anything at the open Tuesday. There you go. 544. Top wick rollover. Looking for 490, 480. TLT is 87.28. I do have to leave temporarily. We have a big event at my child's school. It takes about 20 minutes. And I'll be back, but I'll leave the stream on. We had to do this a couple of months ago too. But Trump pump, please. I don't know, man. I'm not confident on a Trump pump. I'm not confident on a Trump pump. Shenanigans are abound. Did you hear Biden's outgoing message? Yeah, it's not good. It's very weird. Send them a guy you found on Craigslist. Yeah. 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 Top wick 535, still dropping, looking for 480. Roll on the stop, baby. Roll on the stop. Let's see if we can get it. Already down almost 200 points since the open. Too much, too fast. He said all the red states are collapsing economically. Yeah, he said a lot of stuff. Very shocking, even from someone on the left. That was shocking. Shocking to hear that. Coming down to 500. Let's go, baby. 475. Now, I do not want to, like I said, I don't want to get hung up on bear stuff here. If they bring it all back down, cool. We'll grab a chunk of it. We'll write our stops down. But that is a low probability event. Now, 50%, maybe VWAP touch would be great. 480 is what I'm going for. If we get beyond 480, hey, then we're gonna pull up a chair to Gabagoo Town here. But that's not what I'm going to be going for. We still have to be very cautious of shenanigans on OPEX and taking out the high and then coming up even higher here. So if they do elect to reverse this, then we're here for it. All I know here is that the reason why I'm being a little bit tepid right now is because if you look back on the chart the past week and a half, it's been reversal city. Dumperonis, 100 points, 200 points, 300 points, wicks all over the place. It's showing distribution look, and then it will rage 400 points. So, we got to be careful. Yesterday was a distribution close, and then we wake up today with 400 points in an hour. So they're doing a lot of shenanigans here. This is not the time to hit your fist on the table and be greedy and cocky. Tepid. Look at the big brains on Brad. Yeah. You know what they call a quarter pounder with cheese in France? Why the 480s? That is the consolidation from the last pivot. Do they actually call it a Royale with cheese in France? I know we have one French guy in here. Colin Damien, yeah. In Europe, yeah, they do. Interesting. Still holding 530. That's the Q pounder. Oh, man. Yeah, buddy. Germany also? Burger King. I bet your Burger King job is not this stressful. Man, you'd be surprised. That Sunday lunch rush gets pretty feisty, man. Pretty feisty. Changing over from breakfast to lunch. Flipping sausage and burgers at the same time is difficult. They're way differently, so you have to get your timing right on the left hand and the right hand. It's hard. Another top wick. Beautiful. Can we get 480? That's what we're going for. Right now, the price action is still looking a little bit heavy. Not crazy heavy, but still top wicking. If they close over 550, I would reduce all your exposure on your shorts or at least minimize it to a low risk environment. 550 on NASDAQ. Looking over at ES, if we claim over 6024, I would do the same. Reduce your risk exposure to the downside and or roll off any kind of negative delta position. I have to head out here in about 3 minutes. When's the last time I've taken an option? I've taken a couple of options here and there. Anything that I've taken with the server posted, it's been a while, like September. But you'll have to realize I am, when I am not here, every waking second of my life, I'm building this house. So I'm not really fully right now all in on high confidence stuff here. So, which is why I'm trying to get this done so I can get back to focusing on post and swing trades and trading. Then, of course, I'm starting to roll into TLT, which I'm about to put another 10 Gs in here very soon, actually. All right, another top wick back over. Here's 490. Can we get another 10 points, and I'll consider that a W. McDonald's to breakfast sandwiches to beers to diamonds. Love it. What's the timeline on the house? I'm looking to move in early to mid-March. That's when I'm looking to get in there. What's specific about 480? 480 is the consolidation from 7:30 this morning, 8:30 Eastern time. That's not a major pivot. That's just a pivot. But me being a liquidity trader, I've got to be able to go liquidity to liquidity. I can't be gunning for 360 if we can't even get through 480. So first target's 480. If they even get through that, 360. But if they don't get through that, obviously, then you trim up your stops. You let the market do its thing. So there we go. End of March is when we will move into our new place. Nice, JDM. There we go. Little green. If we get over 550, trim out all your exposure. Once you start putting in higher, once you start taking out previous highs, by definition, they have stalled the trend. Keep it easy. Keep it easy. Here comes 549. Beautiful. TLT 8721. Microsoft, yep, Microsoft dumped. Yeah, buddy. $550. So there you go. If they close over 550, roll out your exposure. If they top wick this, I would expect 480 to breach. So 5 minutes. I love the too much too fast move, man. It's one of the most consistent setups based on liquidity that you can trade. It's all about timing it, though. Obviously, yesterday I tried to play it. I was a touch early. Today was hard to be early on today's move. It happened the whole time. I want to get out on 595, but I didn't get the chance. That's all right. You're the only one that brought it to my attention. Thank you. You're welcome, Juicebox. Don't make a video on that. Yeah, that's true. Hey, you know, you may be joking, but that's actually accurate. You know, they do that crap. It's all about liquidity. That was actually going to be one of my next videos, but I won't do it. Please keep that a secret. Yeah. Yeah, I'll get if I keep it just for the Tier 1 members, I'll get a Tier 1 member that's like Goldman Sachs #CEO. And then all of a sudden it'll stop working. What's your criteria for seeing and measuring those liquidity levels? Just based on historical price action volume, does you have another tier of data coming in from somewhere? Well, no, it's a nuance thing. When I see too much too fast, I don't have like a calculated definition on what constitutes too much too fast. It's based on how aggressive is the price action and how prolonged is it. If it's a continuous liquidity move, like this morning was a perfect example, that they are running the book one-sided. And very rarely, from a probability standpoint, rarely, I mean less than 5% of the time, do they sweep a move like this aggressively and then keep on going the entire session without a counter move. It happens Very rarely. The probability is in your favor to counter these type of moves at the open. Now, I'm not saying counter them all day. I'm saying counter them at the open. Now, it could happen either at 9:30, it could happen 9:45, it could happen 10 o'clock. That's the unknown variable, is you have to wait for the least move to play it. And you got to be quick on it, too, if you want to get an early entry. The second you see the signs of them actually countering it, you got to be able to get in. But when I look for too much too fast, it has to be a prolonged move without any kind of huge moves back in the other direction throughout pre-market. So if we blasted 150 points, but among that 150 points we had like 75 points of selling and they just bought it back up, that's usually not going to work. It's not going to work as accurately, I should say. It's got to be a prolonged, sustained move that's aggressively lifting up the ask or crashing the bid down over the time. And then eventually, right about the open, they sweep it back over. And all of that comes down to the reason why I even found that or came up with that, which is not, I guarantee you it's not proprietary. I'm sure someone else, there's no way I came up with anything proprietary. But the reason why I even thought about that is because of what Anna Colling talks about, is that the first 30 minutes of the session has to do with undoing or countering what happened overnight session. Just like the last 30 minutes to hour of the day is setting up for the next session. That's why the middle of the session is typically choppier or more unpredictable than the first hour and the last hour, because that's when the shenanigans happen. In the middle of the day is when the high-frequency traders are duking it out. So knowing that, and me being a liquidity-style trader based on VPA, that the market can't go and go and go and go and go in one direction without an insane amount of inventory. And when you run the market up 400 points in an hour, they are running very low on inventory. So what are they going to do? One, they know people are going to be chasing this hot move right at the open. And two, in order to capture more inventory for a move higher, they dump it back over. They stop out longs to make the market inefficient. You can't trend a market efficiently. You dump the market over, you stop out the longs, you get people nice and bearish, you bounce it, and then you rocket ship for the next leg up. It's kind of like stopping for water on a marathon or something. So it's the whole premise behind why liquidity does what it does, and that's why it works so accurately. I do think this is one of the most consistent setups that you can actually play. The problem with it is it takes a little bit of experience to nail it, because you've got to have the huevos to play it in front of a possible freight train. And two, you got to be quick. And it takes a little nuance to understand when this is actually starting to occur, because I can't really say, here's a little line, just short it when it touches it. It just doesn't work that way. Yeah, I'm about to leave. Yeah, thanks, Anne Frank. What's the liquidity level low on NASDAQ? 480. That's the minor level. We got to 492. I was looking for 480, which is only minor level. So if they take out 480, I'd look for 360. But that's a big if. That's a big indigo foxtrot. Gotta empty the warehouse. All right, y'all. I do have to head out. I'm going to leave the stream on because I'm not going to be gone all morning. I'm going to come back and finish streaming. I would probably say 30 to 40 minutes. Hopefully faster if I get back, but we'll see. We have to hand out all the participation trophies to most of the kids, and the honors certificate to my daughter. So, jabronis. Anyway, I'll be right back. Hope y'all caught some of that move. We'll come back and talk more. I'll see you back. All right, y'all. What's up, YouTube? We are back as well. What's up? What's up? Figures that one day I've been able to join OM in 2 years and I have to leave. What's up, Dylan? Yeah. Apologize for that, but I'm back. How'd the awards go? Fantastic. She got a math honors award. She's a math girl just like her daddy. But usually they only do one class. This time they did the entire first grade and fourth grade. So it took like an hour and a half. It's like, come on, man. And then they had to do like a 20-minute ramp-up music festival. And, yeah. But I'm back. Yeah, so they bounced off 487. I was looking for 480. We almost got it. And then 640. That was me. I was like, come on, don't you know I've got money to make? The market's moving, and I'm sitting there listening to an elementary version of We Will Rock You. Were they playing recorders? No, thank God. Thank God. It's not Guantanamo Bay. I mean, come on now. Let's go take a look. I'm going to do a little update. How do things work here? I hope that the 480 target kept y'all from getting too bearish. That worked out pretty dang well. I remember the recorders. I remember thinking about it myself. Yeah. Yeah, they still play it, though. She has a recorder. And I still have mine, too, from when I was a kid. I found it. Let's see. We have 1.7 billion in puts purchased and 1.3 billion in calls purchased, but they're selling off the calls and buying more puts here. So, so far, the bears are not letting up their grip on the options chain. And I just sat down and I triggered the butt button of selling that I triggered yesterday too. GEX right now is 6030 on SPX. That's the main GEX. Microsoft is flat. Am I looking at the right one? Nvidia is trending up. Apple is back and forth. Dow is trending up hard. So a little rotation into the Dow may not go well for the indices. TLT is still kind of hanging out at 87. VIX hasn't moved at all either. So other than that, nothing's really changed except the 480 bounce that we looked at before I took a bounce here. Let's go take a look at the trace. Where's the implied volatility here? Tesla is green calls. Nothing else. Nvidia is slight calls. Whatever MSTR is doing, they are 100 million in net call premiums, which is astronomical. Try stand up, sitting out again. Yeah. Yeah. What we got? Let's see. The inauguration is going to be inside because of the cold. No, it's not. You know exactly why it's going to be inside. You think this is the first inauguration in January in Washington D.C. that has been cold? What do they think? We're a bunch of jabronis? Yeah, because we have Congress people worth $300 million. Come on, juice box, don't get me started. I was having a good day. Because it'd be smaller inspected? No, because Biden's going to have him killed. So. And a billionaire president for the people. Oh, man, we haven't had a president for the people in 200 years. Two sides of the same coin. There's still time for neither to be president, like Owen predicted. Yeah. Where does it say inauguration indoors? I don't know. I haven't seen it. I got to look it up. That was Juicebox's claim. Got to take a look. CNN? I went one time. It's freaking freezing. Oh, yeah. They need to hold that thing in, like, April. All right. On huge options expiration days, do they usually retrace the big moves? I wouldn't say usually. I look at these days as shenanigans. Nothing's off the table. Some days they have massive expirations. They'll pin it in a 10-point range. Sometimes they'll blast 700 points. Sometimes they'll do a full-on reversal. There's not a set tone to it. So I just try to come into these days with an open book and not try to get set pigeonholed into a certain direction. Interesting. My discipleship group just sent out this message, this quote. I thought it was pretty good to share with the class. Your children will eventually learn who you are beyond your title of parent. Make sure they discover a person they can be proud of. Isn't that the truth? What do I use to track OPEX days? In what manner, Han Frank? Like the number of exposure? The level of exposure, I use Spot Gamma. They do a great job of kind of rolling out all that data for me so I don't have to go number crunching. In terms of tracking price action, it's just more of back testing and keeping a note of what these events typically do. With the VIX slowly creeping in up, this is a point where I would start looking for a short. Other than that, upper direction, what it tells you to look at. Well, I don't like shorting a dull market typically, especially on these OPEX days. You know, the 480 was my target before any other bearishness needs to be considered. So we've already bounced off of that. If I'm going to look for a short, I need to see one of two things here. A big green VIX would help. That would help that thesis very quickly. In terms of the market here, I need to see a touch of the imbalance from 925, which is 5 minutes before the open, which is about 680 on NASDAQ. If looking at ES, I'd love to see a sweep. Well, they've already gone above it. So the S&P today is far more bullish than the NASDAQ is in relation to the recovery. That's probably because of the X sectors. The XLF is very, very bullish. Tech is not so bullish. You know, Microsoft got dumped, Apple got dumped, Meta got dumped, Apple got dumped, Amazon got dumped. So the S&P is far more bullish. That's going to be a difficult one to top tick. So if I'm going to look to short this, green on the VIX and 15-minute sweeping top wick with some decent volume, which we got a little bit of volume influx there on the ES a couple of minutes ago, sweeping off of macro. So there's a potential there for a little retracement after a very prolonged effort. If I had to guess, because the S&P did not have any pullback whatsoever, if they don't sell it before power hour, I would look for a reversal the last 15 minutes. Be very patient with that play. So if 2 o'clock or 3 o'clock Eastern time comes along, 1500 comes along Eastern, and they don't pull it back just yet, just be patient, and I bet you one of those 10 or 15-minute moves before the open, or I'm sorry, before the close, is when they'll give you a little dumperoni. That could be one of those to put on, you know, a 40-point outside the money put, pay 50 cents for it, and see if you can get it to $10. It's one of those days, man. It's one of those days. You just got to be very patient with that move. I might do that myself. I love those OPEX shenanigan moves. You're welcome, Vampire. Do you think people might have euphoria from the 11/6 candle from inauguration coming up? It's possible. It's possible. I don't. I don't know how the market's gonna react. I'm still on the hook about it, or on the fence, I should say. I'm still on the fence about this one. I know everyone's kind of expecting the same bullishness we got the first 4 years, but I don't know. You know, I think there's going to be a lot more shenanigans. I still think the 5800 pivot will fill, although we almost pretty much got it. We got 5809, so we nearly filled the election day gap. So that you could take that off your radar with good reasoning. Now, up until then, I don't know. Like, we have a lot going on here. We have FOMC. We have, you know, the inauguration, long weekend. So I don't know. This very well could be a liquidity sweep. If they don't sell any today, then, you know, liquidity sweep it back down on Tuesday before it bounce back up. I spend my mornings in my basement trading and working out. Yesterday I overheard my wife describe my life as getting jacked and rich. Hey, that is a fantastic compliment from the old ball and chain. So, well done. Getting jacked and rich. It's a superpower to have your wife think you're attractive. going very small for Tuesday. I'm figuring whatever craziness that might happen will happen Tuesday, and Wednesday will start developing the trend for the foreseeable future. I'm of the same opinion, except a little bit longer time frame. So I'm looking at FOMC, the post FOMC, to kind of set the move until March, because you remember, try to zoom out and think the big picture here. After FOMC on the 28th, that brings us into Q1 earnings and oh, I need to answer this call. I'll be right back. Sorry, this is an important call I have to answer. Apologize. All right, sorry about that. All right, so after FOMC, we come into earnings, which will be coming up in Q1, and then the end of March, early April area. That is typically a very volatile period for the markets, and most of the time, I won't say most, at least a good majority of the time, the bears take very hard control of that move end of March into April as they close Q1, rolling off the books and profit taking from the Q1 reallocation of portfolios. You're going to get the big shift in the end of March, early April. So, not to mention, aside from any kind of tinfoil hat theories you have about the new presidency and what they're going to do with the market, is that we still have a lot going on here, strictly from a fundamental analysis of the markets the next 3 months. And then you throw in the conversation of what they're going to do the next FOMC, which right now all metrics point to a pause in the next FOMC, which is in now 11 days. So I think post FOMC, which will be 29th or 30th, somewhere in that ballpark, it'll set the tone for what we're going to do for the next month and a half until the end of March, or 2 months now. Time's flying. I can't believe it's already mid January here. A couple of weeks ago, I just had a fat guy come down my chimney, and now it's like, all right, well, was it time to start planting seeds for springtime? It's crazy. LA fires insurance bankruptcy news will trigger the market. Well, that's an interesting comment, Sling, because you have to realize which apparently you do realize, the most expensive city in the entirety of the country just burnt to the ground. We're talking, what was it? What was it? The last I checked, it was like 80 billion or something like that in damages. And that was 2 weeks ago or whenever it was, a week ago was when I last heard that. So it could have gone up. Insurance companies, not only that, everything that surrounds that, everything that comes along with building homes, lumber, any other construction materials, labor. So the cost of lumber is going to go. Watch lumber futures. 50 to 100 billion in losses. There you go. It's a whole lot of cheddar. Whole lot of cheddar. Call Ukraine for a loan, and Israel, yeah. Yep. So, that will have some pour over into the rest of the world and our economy, sure. Not the world, country, and the economy. It's too big of a loss not to do that. Now, North Carolina, screw them. They won't affect nothing. Hashtag sarcasm. I have so much concern about the deep state I could never hold a long during the inauguration. I don't know what to expect. I honestly don't. I don't know what to expect with the inauguration. $185 billion? Wow. Wow. So, Inauguration of the most beautiful speech ever. Largest crowd size in history. Man, that's, yeah. It'll be crazy, whichever. Not even talking about, I'm not even talking about pro or anti-Trump and all that stuff. Just from market perspective, I don't know what to expect. Yeah, I don't know what to expect. Any suggestion on the end of March PDS timing? I don't hate the idea. Or at least a put that you leg in and out of a PDS style trade. I don't hate the idea. Simply just to carry the exposure on which you can use as leverage. I don't like carrying long dated short activity or short exposure without a particularly strong thesis. However, I do like carrying that stuff for the purpose of leveraging into short PDSs or a PDS or a short option or whatever it is. Now, in terms of directionality, like I said, I've been very vocal. I do think 2025 will not be nearly as bullish as prior years. I think this will kind of be the transition year into whatever comes in the future. I think will initiate this year. That could mean a little bit of green. It could mean flat. It could mean rollover. It could mean dumperoni. I don't know. I just don't think it will be as bullish. I'm not saying down necessarily. I'm just saying I don't think it will be, at the most, it won't be as bullish as what we've been seeing the past 3 years, which maybe that's a bit of a cowardly statement, but it'll keep me safe. Hey, look at this liquid 462. What do we have on ES? Maybe some 22 or 20 or 33, 23 style price action for futures, perhaps futures trading. 23 is still a little bit bullish for me to apply that to 20 to 25. I'm trying to cage my expectations, and 23 still had some phenomenal bullishness. Phenomenal bullishness. At least initiated some phenomenal bullishness. I know what you meant. If you knew what was going to happen in 33, you'd be my new best friend. What do you see in Microsoft? It's above the 50-day, hugging it. Not sure if it's going to try to go below and keep bouncing off of it. Microsoft, yes, it is back above it. It is turning and burning. For all intents and purposes, Microsoft is at the same price it's been in since August. It's just within a range. Up and down, pretty aggressive moves, unable to hold anything. From a volume analysis standpoint, we've had some very large influx of volume that haven't really led us anywhere. We had a very large move on September 20th, a very large volume move on October 30th, and then a very large green move on December 20th, all of which were very, very abbreviated moves. So I'm not seeing enough institutional movement to get Microsoft in or out of the range. In fact, if you go back and look, it's the same price it was in February of 2024. Aside from some oscillations, Microsoft hasn't moved in a year. So it could mean that some of the tech stocks are overcooked. Microsoft or Nvidia is at the same price it was in June of 2024, and very tight range since October of 2024. Apple had same price July of 24. So all of these mega cap stocks are not putting on the returns that we've been experiencing, despite the fact that Nvidia has been pretty dang bullish for a hot minute. Obviously, that's the nature of indexes. So in my opinion, Microsoft is just kind of one of those symptoms of tech being a little bit overextended after 4 years of literally, with every definition in the word, an exponential upwards bull move, which is one of the reasons why I think 2025 will be the year of rotation. Because techs, I mean, if you look at the disposition effect, the first things to sell are the ones that have the highest performance. And by far and large, the tech stocks have been the biggest performers by far. So with everything else, and we joke about yesterday that everything y'all sell me, everything that y'all send to me to analyze is beaten down names. It's all lower cap, mid cap, high cap. It doesn't matter. It's all beaten down unless it's Nvidia, Apple, Microsoft, Amazon, Meta, Google, Tesla, AVGO. If it's not those, they're getting destroyed. Or GameStop, oddly enough. So I think there's going to be a bit of a rotation into the beaten down, or from the beaten down names and or treasury markets and out of the names that have been performing very well. It's harvest time. The wheat's been growing, the sun's been shining, now it's time to harvest. At least that's my thought. That's my thought. I don't know. I need to message Joe and see what he thinks. Yep. Trump announces officially inauguration will be held inside at the Capitol Rotunda. And the parade at Capitol One Arena plans to join the crowd following the swear-in ceremony. It appears to be official. In that case, would you say if access to cheap capital becomes harder, the likelihood of small caps with poor balance sheets having a run is unlikely? Correct. Correct. This is why the Fed's decision and Trump's role in the Fed's decision, the upcoming 12 months, will have a very important role on how the access to capital, good choice of words there, will shift to benefit the small caps and or small businesses and or the average American. Right now, what's the mortgage rates now? 7.2, 7.1, and that's up from when they started cutting 100 basis points. So, if the smaller caps are able to capitalize on cheap cash, which has been the theme since 2009, this is not a new thing. COVID was extreme cheap capital, but we've had access to cheap capital since 2009. And what happens when you're no longer to get access to cheap capital? Or when the banks start to falter because their product is no longer a product. When a product becomes a liability. So it should be an interesting year. There's a lot going on behind the scenes here and a shift in the tides. And it should be interesting. Looking for 475. There you go. I like it. We do have liquidity pulling down into 462 and 480. The same exact level this morning. It'll be a low of the day touch. Could happen. Could happen. And double touch of macro. How's Hero looking? Let's take a look. Hero. Call, selling, put buying, baby. I saw on Shrikreli's stream he looked at the quantum names and their balance sheets and they looked horrible. He's short IONQ since the 50 range. Yeah, I mean, if you are a fundamental macro trader, then I would be hard pressed to believe that a lot of these dudes are bullish going into the next 2 years. At least anything more than moderate, like slightly bullish. If you're strictly into the fundamentals and balance sheets, you have to remember that fundamentals and balance sheets, the market does not move off of earnings or cash flow. It's future earnings and future cash flow. The market is efficient in pricing in future-looking data. If that future-looking data is already priced in or not that great, then we're in for a long couple of years from here. So, yeah, on one hand, the market always goes up. Absolutely, 100%. But at what rate? At what rate? We just, not counting, only talking about 2009 to 2019. We're talking about one of the strongest bull rallies in market history from 2009 to 2019. And even then, we had a couple of years of some pretty decent selling. It happens. It's normal. And then you throw in this meth, cocaine, amphetamine, trend ball fueled rally from 2020 until now. It's like, at what point do we get a decent retraction that doesn't immediately rip back up to new highs? Because yes, we had 2020 and we had the sell-off in 2023, but both times we aggressively bounced it immediately and went even higher, and even more aggressively than when we went down. So at what point do we have a retraction here in price, strictly because fundamentals are breaking down, that doesn't immediately smoke it back up to another 100 points higher? And that's what I'm trying to figure out. Not even necessarily for the Discord purposes. I'm trying to figure that out to cover my booty on my long-term port. Because my goal is to lock in the gains that I've made the past 4 years. And if that means liquidating everything and going cash money, homie, for a year, I need to do that. Which I don't want to do that because there's tax implications. And y'all know how I feel about the IRS. Anyway, now I'm just rambling. Well, institutions hide sell volume inside of green candles and vice versa. I've noticed that some green 5-minute candles contain a lot of sell volume sometimes. Yeah, I suppose so. That's why, for me personally, I don't care if the candle is green or red. To me, it's all about the absolute value of the candle itself. Because if I have high volume at a high level, like a resistance, then I already know there's sellers hitting that. You're not going to get a giant volume spike at the high resistance. You're just not going to do it. Not without a catalyst, at least. So I don't need for it to be red or green. I could make my volume candles one color and it would serve the same purpose. That would be just as effective. So could they do that? Yeah, 100%. That's their process of, they can't necessarily throw out all of their transaction into one little transaction because it'll show up too obviously. That's why they use multiple different brokerages. They use sweeps. They use multiple different transactions across many brokerages to transact a particular order at different times and different lots and or different days. Can't you have it cover calls puts instead of selling? I can. I don't know if I want to though, because we're not talking about 20 grand like my day trading portfolio trend. Like my typical trade of my day trading portfolio on a swing trade is about 20 to 30,000. But we're talking about my long-term port, which is my life's work. I don't know if I'm savvy enough to put on a collar and manage it just right all the time, kind of like what what's the name did. I don't know. Yeah, Marissa Cuban. Man, look at that. That's a lot of transactions. Dude. Unrealized losses of 3.3 million. Wow. So when it gets to that point, here's the thing, Callie, is that my theory behind that, because I've thought about that exact question now for many, many years. Since this kicked off, and even after the recovery of 2020, I'm thinking to myself, how long can this go? And then 2021 happened, and then the recovery of 2022 happened, and then the recovery of 2023 happened. And every time I'm thinking, how far can this go? How long can this? Because I've never seen price action like this. Nobody has. So I keep thinking to myself, what do I need to do? Because in order for me to have the exposure to do those kind of positions, I'm going to have to liquidate some to free up some capital just to give me some wiggle room, which I don't necessarily want to do. So I would have to sell some regardless, just to free up some capital. But my thought process is that if the thing happens that I think is going to happen, then it's going to be too far or too big of a move or too volatile for me to really want to be involved in trying to hedge it. So what I'd rather do is you just kind of liquidate, even just for a time period, and then get back in and somewhere around the ground level. It doesn't even have to be at the bottom. Just maybe if I can miss even 40% of the move, then I would be, I would consider that a major win. I mean, I'm still young. I still have 20 years before I'm even going to be touching this stuff, considering retirement. So I've got plenty of time. I'm trying to be efficient with my capital, is what I'm saying. So I don't know. We'll see, and we'll do it together. We'll do it together. It'll be a learning experience. Hopefully, I don't have 3.3 million in realized losses though. That would, I think that would shake me. Anyway, it is 12:10. I stay it on a little bit longer despite the fact that this thing ain't really moving, but that's going to be it for me. 3-day weekend. Markets close Monday for MLK Day. Just so happens also to be the inauguration. We'll see what happens. I think we're about to turn the page here, going into the next year or so. So we'll see. If you have any questions, please let me know about the market or this morning's move down to 480 or whichever. Until then, I will see you all bright and early Tuesday morning. So hit me up with DMs. I'm out. See you.